Stocks gain after the US Federal Reserve holds on to its rate cut plan. Metals, utilities and industrials lead the charge. Mid-caps see a sharp recovery.
Rate gain perks up on bagging an order from a leading US rail service. Hinduja Global jumps on a plan to sell its optic fiber business and trim costs, while Walkhard gets a leg up after it launches a QIP offer.
Gold scales to a new high of $2,200 per ounce. That's after the dollar slips following the US Federal Reserve stance that they will keep 3 rate cuts on the table for this year.
Indian Prime Minister Narendra Modi, speaking at the Rising Bharat Summit, assured that India is set to witness unprecedented growth in the coming years. He added that India will be a key driver of global growth, taking it to new heights.
Hello and welcome. You're watching us here on Halftime Report. It is a good afternoon. I'm Manglam Malu. With me is Sonia Shenoy. Sonia, the last 3 days haven't been particularly very good for our market, especially the mid-cap end of things. But it looks like the Fed has given us a nice surprise, holy treat for us to go into the weekend with. I mean, Thursday, Friday should be okay for us.
Absolutely. And I think the Fed to the rescue, right, as they say. So this time around, no news was good news. There is no move on rates. And there's also the typical 3 rate cut expectations for the year. And that's something the street has taken with both hands. Most global markets, in fact, are sitting at fresh highs. The Japanese market, interestingly, is at a fresh high as well. So looking pretty good over there. But let's get straight to individual stocks. One stock that has been hitting fresh highs is Avenue Supermarts. CLSA initiated coverage on the stock and spoke about a $500 billion opportunity that this entire sector has, with a large part of it being in the unorganized space. So perhaps a big positive for Avenue.
A big positive indeed. CLSA has initiated coverage. And remember, the stock had been an underperformer over the last couple of years or so. So by doing so, it's also become, relatively more attractive when it comes to valuations as compared to what it was trading, say, about 2 years ago. So that's something that CLSA likes. And, it's an unorganized business. Nearly 95% of the content industry, which is worth $500 billion, is currently unorganized. So that's the shift that CLSA is playing for. But that's something that the street knows. The 2 things that they are pinning their hopes on for Avenue Supermarts going forward. One is the improvement in their assortment and improvement of contribution coming in from private labels in their assortment itself. So that could aid their margins going forward, perhaps lead the next leg of growth as well. And the second one, the street wants DMart to open stores very, very fast. I mean, no matter what they do, the street can't have enough of their store opening. And over the last couple of years, the store opening itself has slowed down as compared to all the other listed peers as well. So we have DMart stores, which CLSA believes can actually increase by 3 times over the next decade. So from 350, the footprint could increase all the way to 1,000 stores. And were that to happen, then, it would make a case for buy at a target price of 5,107 rupees. The fact that someone's looking at DMart once again after the disappointment that we've seen in, the margins in particular over the last 7 or 8 quarters is reason enough for the stock to perhaps move higher today.
Okay, and one more stock which is charging ahead is BSE. It's up 7%. Motilal Oswal is another one that's looking pretty good. There are some brokerage reports on that. Both these stocks gaining now. Sudarshan is joining in to give us the highlights. Sudarshan, over to you.
So first I'll talk about BSE. The stock is higher on a positive brokerage note. Investec has upgraded the stock to buy from hold and target is rupees 2,800 per share, which implies 30% upside from current levels. Investec expects company to witness strong traction in equity derivative volumes, and the option market share for the company has jumped 3 times, from 4.2% in December to more than 15% in the March quarter. And as per estimates, it is expected to see further market share gains given rapid scale-up of BankX products. Even on the margin front, Investec sees an improvement in Q4 FY24. And on the valuations front, BSE currently trades at 24 times FY26 PE, and Investec believes it has potential to achieve a 45 to 50% EPS CAGR over FY24-26. The second name in my coverage list is MK on Motilal Oswal. It initiates coverage with buy rating and target is rupees 2,000 per share, implying an upside of nearly 25% from current levels. MK believes company is a perfect vehicle to ride India's wealth, and its 2 major segments, assets and wealth management, are well propped to deliver superior growth. FY23-26 operating profit CAGR is seen at 25%, and 70% of company's net worth is in equity and MF treasury assets, which is seen as an added safety margin to valuations of core operating business.
All right, Sudarshan, thanks a lot for that. Let's talk about SJVN then. The stock has surged almost 300% in the last 12 months. This is our Insight Edge segment where we discussed power demand trends and opportunities in the renewable space with the chairman and managing director at SJVN, Geeta Kapoor. The insight that we got from her in terms of the opportunity that there is and the plans that SJVN intends to do going forward is something that have kept the stock higher today, along with the general uptick in the market as well. A 300% up mover in the last 12 months. This is SJVN.
Comparatively, because of the initial cost that is involved in hydro projects, the tariff is a little higher. Per unit, as on date, we can say it's approximately around 8 rupees, whereas as compared to solar, which ranges from 2.50 to 3 rupees. But this is the initial. With the passage of time, the tariff in hydro undergoes a big change. Tariff is determined in terms of 5 things. Its return on equity, its interest on loan capital. So once the loan is repaid, interest reduces. We have depreciation. We have interest on working capital and the operation and maintenance expenses. Our total commissioned projects capacity is 2,377. The major chunk goes to hydro. That is 1,972 megawatt. It's hydro. And we have 404 renewable projects, a single location largest solar project, Bikaner project, 1,000 megawatt. We propose to commission towards September end or October. So this adds 1,000 megawatt to our installed capacity, 900 on account of Arun 3, and several small projects. So a total of about 2,900 we will add in terms of megawatt, both hydro and solar, in the coming year 24-25. For the year 24-25, I can tell you that we'll be adding around 2,700 crores in our revenue. With the present projects in hand, another 1,000 to 1,500 crore we will add in the year 25-26. Even in Buxar, we are on schedule, and hopefully the first lighting of the boiler will go to September 24 this year.
Okay, let's take a quick break on that note. On the other side, we have an exclusive conversation lined up with the Akasa Air founder and CEO Vinay Dubey. Do stay tuned in for that. Welcome back to Halftime Report on CNBC TV18. Well, expect to end FY24 in a growth trajectory that no one in the history of global aviation has ever seen. These are words from Akasa Air founder and CEO Vinay Dubey. Also talking about their plans for international expansion and much more in the conversation with our colleague Danish Anand. Take a look.
We have foreign government permissions that are involved, and sometimes these foreign governments take 3 months, sometimes it takes 4 months or 5 months. We've made this application a little while ago, and so I would say it's imminent. And my thought is hopefully we'll get all our permissions in place for Riyadh, Jeddah, and Kuwait, like we did for Qatar, in a very short period of time. But I'm unable to give you a specific answer. It's not 9 months, it's not 1 year. Hopefully a lot shorter than that.
Right.
Perhaps later this summer.
Right. So by the end of FY25, how much business are you expecting from international routes? And is there some kind of a target that you've set for the company?
No, Danish, we have not set a target for the company. Although, as we said earlier, we are, India's fastest growing airline. We are also India's, first and fastest growing internationally. And so we have, a lot of ambition internationally, but we haven't set a target. We've got an aircraft that has the capability to fly to East Africa. We've got an aircraft that has the capability to fly to Hong Kong, Indonesia, into parts of China, certainly to a number of, CIS countries. So we've got an extremely capable aircraft. We have not set ourselves a particular target. And I'll also say that we are, living in a country where, you've got the youth in India that really want to travel abroad. So I think international travel in India is going to grow much faster than domestic travel. And we're just very excited that this is the first step of many international destinations to come, including in this coming financial.
Right. Since Akasa is going international, what are the plans for codeshare agreements? Are you in talks with some foreign airlines for the same?
For the moment, no. For the moment, I would say that India has, an incredible capability to be able to generate international traffic on its own without needing anything beyond. And so for the moment, no, we're very happy to do this as Akasa on our own.
Right. Now talking about the industry now, we are very well aware that the new flight duty rules that has been mandated by the DGCA, they're all set to kick in from the 1st of June. And the industry somehow feels that it is not ready for this, as there could be a shortage of pilots. So what are your views on this, and how do you align Akasa with the latest mandate from the government?
Yeah, so I'd like to point out two things. First, that Akasa has no shortage of pilots, right? We've got 700 pilots here. We're extremely pleased with the way in we've been able to attract and retain our pilots.
How do you expect to finish FY24 in terms of revenue growth?
We're not giving guidance on this, Danish. There's some benefits of being a privately held company and not having to provide, revenue and other guidance is one of them. I will say, two things in terms of finishing FY24. One is, financially and from a cash perspective, in an extremely strong position. So that's the one thing, I will say that we've built this, rock solid foundation when it comes to both the business model and when it comes to being capitalized and cash. And that's one way we expect to end FY24. And the second way is, in a growth trajectory that no other history in global aviation has ever seen. And the third thing is we expect to end I know I said two, but I've got the third. We expect to end FY24 as India's most on-time and most reliable airline, as published through DGCA statistics. So these are three things that I think you can expect us to end the fiscal year 24.
Right. What would be your number one priority in FY25, and how is the aircraft delivery plan really looking like for Akasa at this stage?
Yeah. So continuing to be, India's fastest growing airline continues to be a priority. We're not worried based on our delivery schedule. We've been able to work things out with Boeing to the point where the delivery is going to meet our expectations and is going to allow us to continue to be India's, fastest growing airline. So I'd say that, lots of growth, lots of international flying, lots of growth opportunities for our employees is how we expect FY25 to look like, when it comes to size and shape. But really in FY25, we believe we'll continue to be India's most on-time, most reliable airline.
Right, interesting conversation there. We could definitely do with a few more airlines and a lot more efficiency in the skies as well, and some healthy players when it comes to their financials too. So that's about Akasa Air. Take a short break, come back, talk about the markets, because now the Nifty is holding up with gains of almost 130 points. So on the other side, Aditya Agarwala of Invest for Edu will join in with some trading strategies. There was some moderation from the highs of the gains. Aditya will tell us where the levels are. Welcome back. In the last few minutes, the market's moderated a bit. When we started the show, the Nifty was up almost 200 points. Now it's up just about 140 odd points. So it's a 60-point downtick led by a couple of these banking names. So Axis Bank has moved to the low point of trade. Maruti, after hitting a record high in yesterday's trading session, now mildly in the red, currently at the low point. TCS too has slipped a tad. We did see some gains come by for the IT pack in the earlier part of the morning, but TCS is one of those stocks which is down 6% this week itself. And the Adani Group stocks, Adani Ent in particular, is at the low point of trade. But nevertheless, it's been a decent first half of trade so far, both the Nifty as well as the Nifty Bank doing well. And what's more heartening is that the advance decline is still largely in favor of advances by a mile, almost 2,000 stocks gaining for just about 350 stocks which are declining on the National Stock Exchange. And those lines are pretty much parallel throughout the day, telling you that there is fair amount of health in the market breadth. But the 22,000 mark, that remains to be crossed considerably, because it is also Nifty weekly options expiry. Those who are writing these options are writing both the 22,000 put and the 22,000 call together. So the 22,000 put has a premium of 45 rupees, 22,000 call has a premium of 20 rupees. Together would give you 65 rupees. So those who are playing for this are playing for the 21,935 to 22,65 sort of range on the Nifty. And were the Nifty to break on either side of the ranges, there is some punt buying at the 21,000 call as well, which is coming off, with the market coming off from the highs though. A lot of stocks in focus. PFC, REC, both of them are seeing some short covering. SAIL, that's the one which is outperforming along with all the other metal stocks that may re-enter F&O ban after having exited it just yesterday itself. And RBL Bank and Hind Copper, which are both in F&O ban, given the open interest activity there, we may get news that they may exit F&O ban in the evening today.
Okay, well, thanks a lot for that. Aditya Agarwala of Invest for Edu is joining in now on the show to tell us how to approach the markets. Aditya, hi, welcome to the show. So this is a relief, right, that we're seeing after many days of a downtake. Do you think it can sustain itself, and what is the prognosis for the rest of the day?
Good afternoon, Sonia. Thanks for the show. Good afternoon. So I believe markets has some more leg on the upside. This is not the end of the pullback. Having said that, markets will remain choppy and volatile. I don't see markets heading to a new all-time high immediately as well. On the upside, clearly 22,000 to about 22,200 is the immediate hurdle. That is where the 220 DMA is also there. And on the downside, 21,900 is an immediate support. So my sense is closer to about 21,900, 21,950. Traders can look to initiate fresh long positions. If you missed out on the morning trade, that is a good opportunity to go fresh long on the Nifty. And you can see markets scaling closer to about 22,100 and then eventually 22,200. Standing at this moment, I don't see market crossing 22,200 in a hurry. Markets will spend some time closer to about 22,200, about 22,000 range. Talking of Bank Nifty, that is something, Sonia, has clearly been an underperformer. And in fact, in trade today, also after a decent up move, it's the banks which are giving up the gains the first. So that is something which has to be watched very closely. 47,000 on the upside on the Bank Nifty is acting as a major hurdle. Till the time that is taken out, I don't see a clear run up in the Bank Nifty as well. There will be pockets of outperformances within the banking space, but there are other pockets in the banking which are pulling the index down. So on the Bank Nifty, 47,000 is the major hurdle to watch out for. On the Nifty, whereas I believe closer to about 21,900, again a good opportunity to initiate fresh long for a target of 22,000 to about 22,200 on the upside.
Right, that's about the index. Individual stocks, how are you playing this?
So I've got a couple of buy recommendations, Maglam. The first one is IRCTC stock. Somehow has weathered the storm that we witnessed in the markets, and then most of the railway stocks corrected big time. IRCTC actually went into a sideways consolidation and looking strong on the charts now. It's broken out from that consolidation on good volumes. So at current levels, I believe one can initiate fresh long for a target of 1,000 rupees. The stop loss closer to about 900. The second stock is ITC. After that massive gap up open, stock gave away most of its gain and now it's covered up the gap area. And yesterday we saw the stock bounce back in trade. Today also it's following up on that move. So I believe at current levels it offers an excellent risk to reward ratio. One can initiate fresh long in ITC for a target of 440 on the upside with a stop loss at 407 on the downside.
Okay, well, let's take a quick break on that note. On the other side of the break, we'll get you more on the markets and stock-specific action. Do stay tuned in. Well, one of the big stocks that is moving around this afternoon is IRB Infra. There's an upgrade from Kotak Institutional Equities. Vivek is with us to give us the highlights of that note. Vivek, over to you.
Well, that's right. A very interesting development happened in IRB Infra on March 14th. And like we had highlighted, there was a secondary stake sale that happened in the private InvIT of the company. So Sintra went ahead and purchased a 24% stake from one of the GIC affiliates. That held 49%. So now the latest shareholding as far as the private InvIT is concerned is that IRB Infra holds 51%, Sintra holds 24%, and the remainder 24% is actually held by GIC affiliates. So after this, the management went ahead and held a couple of analyst meets where they explained the rationale as well as the valuation at which this particular deal was done. Post that, a couple of notes have come, and this particular exercise helped go ahead and give a value discovery process for IRB stake within the the listed private InvIT. Now, when you're talking about what Kotak has to say, number one, they've upgraded the stock to an add from a sell stance that they had earlier. Target has been raised to 65 from 60. What they're saying is that the total private InvIT value is now at 40,700 crore. They're saying IRB's 51% stake thereby is valued at close to 20,400 crore, implying a close to 34 rupees a share value of IRB in the private InvIT. So this is something that has given a bit of a value discovery. Along with that, they're also saying that NHAI's shift towards the BOT model of awarding road activity and road projects is something that will actually benefit IRB Infra, as the company is much better placed in terms of balance sheet strength compared to its peers. So that is another reason why Kotak likes IRB Infra at this point of time.
Right, that's IRB Infra, but that's not the only stock, Vivek, which is up and about in trade among the others. You're also tracking Wockhardt, the QIP announcement.
Well, that's right. So last evening, Wockhardt went out and told the exchanges that they were looking to raise funds via the QIP route. They had fixed a floor price for the QIP at 544 rupees a share. Just prior to market open, we managed to access the term sheet for this particular fundraise. So what we understand, from the term sheet is that the total issue size is going to be close to 570 crore. The base size of the issue is 350, and in case the company chooses to go ahead and exercise the green shoe option, they would have the ability to go ahead and raise another 220 crore. The indicative issue price is 517 rupees a share, which is almost a little over 5% discount to the March 20 close. Now, if the company goes ahead and completes the fundraise of almost 570 crore, the total equity dilution would be almost 7.11%. It will be interesting to see what Wockhardt does with these funds and whether this particular fundraise goes ahead successfully.
Okay, thanks a lot for that, Vivek. So that's on the Wockhardt QIP, but RateGain is up in trade. The company has bagged an order from the US-based Brightline Trains. Reema's here with more details on that. Reema, over to you.
Thanks so much for that. So Brightline Trains is a US railroad service company, and they are planning to use one of the products of RateGain called AirGain, which will help in advanced rail and pricing intelligence. So this partnership, now RateGain has a lot of SaaS products, right? So they will be using the SaaS product called AirGain of RateGain, with which they will get accurate, real-time competitive pricing insight, which will bolster its position in the US rail sector. Now, because it's a SaaS kind of a product, there is no upfront amount. The value of the deal depends on the kind of transactions which take place. But I want to use this opportunity to talk about RateGain and the kind of performance. 125% rally in the last 3 years, and 3 reasons for that. One, very strong revenue growth. The company started the year with a projection of a 55% top line growth, later upped it to 65% plus, and in the last quarter, they said that revenue growth will be 69% plus. Not all organic, there was an acquisition, but still, through the year, the company has upped its revenue guidance, and in the first 9 months, they've done a top line growth of 84%. Secondly, margins for the company have been consistently expanding. In the last 5 quarters, margins have gone up from 16% now to 20% plus. And the third reason is the cash on the books is solid at 1,020 crore as of the last quarter. Back to you.
All right, Reema, thanks a lot for that. Well, moving on the sidelines of the JSW MG Motor Partnership launch event, JSW Group's Chairman and Managing Director Sajjan Jindal confirmed to CNBC-TV18 that JSW Group will invest $10 billion in India's automobile sector. He also spoke about their steel and cement business and the plans going forward. Listen in.
The whole ecosystem over the next 7-8 years, we would be investing close to $10 billion in the auto industry, in the new energy vehicles, including buses, maybe trucks tomorrow, commercial vehicles. Because I really believe that if India has to change and if India has to save its import bill on fuel, and if it has to become Atmanirbhar on its own energy sources, then we have to move to the new energy vehicles. We are right now in 5 verticals: steel, energy, infrastructure, cement and paints. These are the 5 businesses that JSW Group is involved with. Steel is the primary mover, and now we are 28 million tons, and in next 3 months we are commissioning our 7 million tons more capacity. So we'll go to 35 million tons in the FY25. So that is a significant capacity, and we are doing a brownfield expansion in our existing plants to take by the end of 2030 we should be close to 50 million ton capacity. That is our plan. Similarly, in the energy, we are really focused on our renewable energy, and we are really pushing hard to build more and more capacity in the renewable. Our stated goal is that by 2030 we want to be 20 gigawatt renewable company.
Inorganic expansion in terms of acquisition of a stake in NMDC. What about the cement business listing?
Cement, I think we are already planning sometime this year. We would be looking to do the IPO.
All right, with that, we'll simply do a short break, come back, get you more on the markets and a lot of stock-specific action. Stay tuned. A lot of these realty stocks, Bangalore-based realty stocks, which were under pressure at in the earlier part of this week. Sobha is one of them. Yesterday, we saw Prestige do well, particularly in the second half of trade. Sobha has picked up some pace today as well. It's up around 8%, and today's gain is the only gain that it has had all of this week. In fact, in the earlier part of the week, we did see some decline. This month itself, the stock is down around 13.5%. We're also seeing some up move in names like Zaggle Prepaid, another big mover, had been an underperformer in the earlier part of the month. So some of these stocks are making a bit of a comeback. Can't say the same for a lot of these stocks which are actually underperforming right now, and that includes the likes of a few of these names like Metro Brands, which saw a big move yesterday but is underperforming, some profit taking today, and Paytm is the other one, down 2.5% after a decent rally that it saw in the earlier part of this week. The Nifty now back again closer to that 22,000 mark. Good time to get in Yash now. Yash joins in with some details on the IRDAI board meet. Yash, what are the decisions that could be made?
Well, Mangalam, the Insurance Regulators Board met very recently, and this board meeting was particularly very crucial and important for that one agenda point which was to be discussed and an approval was expected. That was around the surrender value which is paid by life insurance companies to the policyholders in case of an early withdrawal of the policy. What we've picked up from our sources is is that the insurance regulator has approved the surrender value regulations for life insurance companies. Of course, a proposal on this one was released by the regulator in December 2023. That proposal spoke about increasing the surrender value by as much as 2 times to what it is today. And if that proposal would have come in the form that it was proposed, then insurance companies would have been able to retain just 57%, just 17% of the premium which they collect from policyholders as compared to 57% which they retain in surrender charges today. Now, what we've been given to understand is that insurance companies had put forth their suggestions on surrender value. That was incorporated by the regulator, and certain changes in favor of life insurance companies have been approved as a part of the final regulations on surrender value. Not just that, the final regulations of surrender value are expected to be released by the regulator by as soon as early next week. What had the insurance companies suggested? One was, put surrender value depending on the duration of the surrender of the policy. So if a policy surrender, is a longer duration, then the policyholder could be eligible for a higher surrender value. But for early surrenders, the policyholders could only get lower or no surrender value. That was the proposal which was put forth by life insurance companies. We need to see what comes as a part of the final regulations on this very important topic of surrender value.
Okay, thanks a lot for that, Yash. Let's do one thing. Let's also get back to tracking the markets now. Manish Chokhani of Enam Holdings believes that the Indian market can deliver up to 10x returns over the next 20 years. He also identifies financialization, digitization and infrastructure creation as key trends in the Indian market. Speaking to CNBC, he also said that growth in India may be slower than that in China, but is certainly more stable. Listen into his comments.
The last 43 years since the Indian index was constituted, this market has compounded at about 17% in local terms. I'm obviously adding dividends back in there, but 15-16% return on equity has been the norm over here. And the markets, by and large, have gone up about 4 to 4.5 times in every decade. It's no different that the next 20 years, again, would see an inflection point in this country. And let's assume we just do the same 44 times and 4 times. It's 16 times higher than today. So from this index, you would not just go from a 4 trillion to 40, but you actually got a 60 trillion number in sight. And I'm assuming at some point margins will go down, or returns may go down, competition may come down, valuation excitement may come down. So a 10x from here over the next 20 years is very, very likely. You're clearly seeing a trend for financialization in India. So all the stocks in those categories, whether they're banks, insurance companies, capital market players, mutual funds, all are doing extremely well. Obviously, people want to build better quality homes and lifestyle for themselves. So the entire consumer discretionary place, whether it's housing, whether it's home improvement products, whether it's automobiles, whether it's eating out, hotels, travel, there's a boom in all of those going on. The third category, of course, is as infrastructure moves from the government hands to private hands. You've seen the likes of Ambani and Adani and Jindal and Tata and all these groups getting involved, making significant returns in businesses which tend to be more long gestation but more stable in terms of return profiles. And we're building out the whole India stack with the digital platforms. So that's kind of area number 4, where a lot of money is being made by people in consumer tech and so on. And then, of course, as all this gets built out, it's a lot of the capital goods players, Larsen and Toubro of the world and so on. China's had its own trajectory of growth, and it's been driven a lot by fixed capital investments by the government, not often yielding real returns. And you're seeing some symptoms of that in their property and infrastructure space. In India, on the other hand, it's really been the private sector driving the growth on infrastructure, whether it was ports or it's airports. So other than highways and railways, which is what the government's really been driving, the rest of it has really fallen back on the private sector, which has looked to create economic returns and not expanding, capacities 10 and 15 years ahead of requirement. Growth tends to be a bit slower in India than compared to the Chinese, overstimulated growth, but it tends to be a lot more stable.
All right, with that, we'll take a short break. On the other side, we will continue our coverage, but this time not on the equities, but the commodity space, and in particular gold. Gold has crossed that $2,200 per ounce mark at a record high. Saurabh Gadgil, MD at PN Gadgil Jewelers, joins in. Manisha will take that conversation forward. Some mid-caps seem to have found their funk once again. Polycab is up around 4%. Oil India is doing well. Lupin from the broader markets, actually, the entire pharmaceutical space, Granules, Lupin, we're seeing decent gains out there. Alchem Labs is the other one, which has now moved into the green after being in the red for most part of today's trading session. But what's actually shining this time around is gold. Manisha joins in with all things there. Manisha, I thought that you would be, wearing something in gold, become more Bappy-like.
Bappy-like. Oh, well, I have pictures with Bappy though. But as I was telling you in the break, I have a heart of gold.
Oh.
How do you read that? All right, but let's talk about gold. And yes, it's trading at an all-time highs in the international markets and the Indian markets as well, fast inching towards that 67,000 per 10 grams, a level that we have never ever seen. And the run-up has been quite strong. Joining me for this discussion now is Saurabh Gadgil. He's MD at PN Gadgil. Saurabh, hi, welcome. All-time highs on gold, and while of course the markets have been ready, expecting that the gold will hit all-time highs in this year, but the speed at which it seems to be doing that, is that baffling you?
Hi, Manisha. Yeah, like they say, gold is at all-time high. The speed has been a little bit of a surprise, but on the ground, people were expecting gold to be really rallying up. The sentiment has been bullish. So even today, right from the start of business, there's been no selling pressure. People have not flocked to sell gold. In fact, we are getting a lot of feedback from customers who are happy that they bought at the right time and gold has gone up. Plus, this week is very important because there are a lot of holidays this week, coming Holi on Monday, Good Friday on Saturday, long weekend. So I think business should be good, and the gold remains in a bullish environment. Even a common man on the street today is talking of, gold will create new highs this year. So I think this price hike was a little unexpected, but I think it's well taken by the market. And I don't see any, setback from this in terms of consumer demand. it will remain strong.
Saurabh, we started this year with around 61 or 62,000 rupees per 10 grams for gold, almost trading at 67,000 now, and the street seems to be talking about 70,000 and prices beyond. What's your sense?
See, last Gudi Padwa, if you look at it, gold was 58,000. This time it's almost 68,000. So we have seen a 10,000 jump in a year's span of a year's time. I think, gold this year will remain in a bullish trend because of, the US-China crisis, Ukraine, Russia, geopolitical tensions in Israel, Middle East, plus the interest rate, inflation worries. So I don't really see gold, coming down. But having said this, we'll see it's not going to be a linear movement upwards. We'll see downward spikes also. But the year looks to be strong, and I advise people that one should really stay invested in gold. Gold is a long-term asset. These are the years for gold, and keep on buying at dips and keep on accumulating gold. Gold will definitely give you good returns in the next 3 years.
All right, Saurabh, that is absolutely golden words spoken by you, because when you look at last 3 years or 5 years, and there were actually some reports suggesting that in last 20 years, barring 3 years, so 17 years, gold actually has given you better returns, and it has definitely beat inflation in many of those years as well. Saurabh, how is the buying happening right now? I mean, yes, people who are invested, as you said, should continue to keep invested because the gold prices are going higher from here. But are new buyers coming in, Rao? Or is there more exchange of gold happening at these higher levels? Are people also coming and selling gold to make use of these prices?
So, Manisha, nobody's at these prices. That is one trend we've seen across all stores. There's no demand for selling, moving, getting out of gold. Yes, a lot of wedding jewelry will be bought with old gold exchange. So a lot of jewelers like us are doing these programs, encouraging people to exchange old gold and make new jewelry. So that is going to take further step up with these high prices. I also feel a lot of people will definitely invest in gold, will definitely buy gold, because the scenario looks bullish. It's like when you look at the Sensex, it's creating a new high, but people are still buying. I think you see the same thing in gold. So I personally think that demand will not be affected. It may move a bit more towards exchange. You'll see a little dip in bullion sales. But, for the year, I think India would see strong demand in gold.
Saurabh, how have been the sales for this quarter until now? I mean, I know it's too early to start seeing those numbers, but January and Feb, we do understand, weren't such a great month. And now, of course, March also comes with March closing. We have elections coming forth, and that is a time that we don't see a lot of movement of higher-priced goods between cities and states there. Do you think those are a couple of factors that can actually weigh on?
See, Jan, like you said, was a little slow. It picked up towards after end of Pouch season. It picked up. February had been good. Till now, March has been quite decent. We'll see I think the next week should be good because a lot of holidays and people have planned purchases. Weddings are there in April, May. So I personally think that, it should be a decent quarter. And April to June should be good. I mean, the elections are there. Definitely, it will restrict some movement. But at the same time, if you look at India, the consumption is growing, GDP is growing, there's a lot of positivity. So that will weigh in people's buying. And I don't think this election we'll see a dip in sales. In fact, we'll see an upward tick in sales. Gudi Padwa should go well. And with this whole bullishness around gold and investment, I think, we are heading for a good season ahead.
Saurabh, just Gudi Padwa, as you said, the wedding season as well begins in the next quarter. And then you also have Akshaya Tritiya, which is the second largest gold buying festival after Dhanteras. So what is it that you are working in sense of numbers? So this quarter, do you think is going to be, as you said, just about decent, maybe flat as compared to previous year as well? Is the next quarter going to be better than this one?
This quarter, like I said, will be almost like last quarter. We will not see much growth in terms of quantity. Though in value, everyone will show huge growth because prices have gone up. But I think the first quarter of 2024-25 will be good. These two seasons, Gudi Padwa, Akshaya Tritiya, along with the bullishness in the gold prices and the environment around us, wherein there's a lot of sense of positivity, stability in the Indian markets. So I think this quarter should be a good quarter, and we should look at a growth of around 10% over last quarter is what I think.
All right.
This quarter should be a good quarter. There is Gudi Padwa, there is Akshaya Tritiya, like you pointed out, the long festive season. Thanks a lot, Saurabh, for joining in and also giving me a great idea. Manisha, you said you have a heart of gold. How many grams are you giving me?
Diamonds.
No.
No, gold. Well, we'll of course talk after about that.
All right, we'll take a short break on that note. Thank you so much for tuning in on Halftime Report. Business Lunch takes all the market action forward.